It's time for the Phil Ferguson Show.
This is Phil Ferguson, and you are listening to the cleverly titled The Phil Ferguson Show. Sadly, the lawn maintenance company has decided to just show up, so if you hear the mower or the trimmer or the air blower in the background, my apologies. But I have limited time, and this is the time I have to do this, so we're going to go and have fun. First thing, this is recorded on February 23rd, the date this podcast goes out, and at least so far, the stock market has had a very good 2024, and particularly a continuation of phenomenal price increases for large cap growth, most noticeably, at least yesterday, NVIDIA, up something like 8 times from just a couple of years ago. So if you put a bunch of money in NVIDIA 8 years ago, you're rich. But for the rest of us, it's just a small part of one of our index funds. That would be the large cap growth from Vanguard, VIGAX. If you are following the general ideas presented in this show and you're using stock index funds, first of all, you're welcome. Congratulations. You've done amazing. Last year, we switched to 50-50 growth versus value instead of an overweighting in value as we had for a previous couple of years. And the large cap growth fund went up 47%. I don't know what it's up so far this year, but it's up a good chunk, maybe 10% or more. But this would be a good time if you have the flexibility to look at your allocations, because large cap growth has grown so much, so fast, it would be a very reasonable thing for you to rebalance. So as an example, if you have 50,000 in large cap value and you had 50,000 in large cap growth a year ago, you might have 52 or 53,000 in value. But now you might have 70, 75, 80,000 in large cap growth. At a minimum, you could sell some of the large cap growth and put it in large cap value, or you could redistribute it to other items in your portfolio that are now slightly underweighted. And I think that would be a good use of your time. And of course, in the short run, we have no idea what will happen. It may look like that was a stupid thing to do, but in general, over time, maybe once a year, rebalancing statistically adds to your performance. So it's a little scary to sell some of the winners and put it in some of the things that, at least this year, aren't losers, but aren't as big a winners. But it's mathematically, historically, no guarantees, no promises, future results may vary, a reasonably likely thing to do. So keep that in mind. If you are adding considerable money to your portfolio, you can add to the things that didn't go up. If you're taking money out from retirement, now would be a good time, because during 2022, for a lot of people, we didn't sell any stocks because they were all down. Well, 2023, they were up. They're still up. So if your cushion is smaller than it should be, or if you're getting closer to retirement, instead of adding 2 or 3% to your cushion this year, think about adding 4 or 5 or 6% to your cushion. I am not suggesting that you do anything dramatic. I am not suggesting that you get out of the large cap index. I am suggesting a rebalancing. only a few percentage points here and there. So don't get too carried away. But yes, the stock market is doing well. Will it continue? I don't know. You don't know. And probably one of the most valuable things I've learned as an investor, at least one of my limited skill set, is that I don't know. I don't know which stock's going to go up, which stock's going to go down. I don't know exactly which segment or how things are going to go up and down, at least not in the short term. In the long term, there's some things that can be seen like we did with bonds, where we avoided long-term bonds like the plague, and thank God we did. People that had long-term bonds over the last couple of years have lost 50% or more of what they had in long-term bonds. We did not. So anyway, more than enough on that. I didn't even have that on my list, just popped in my head. I want to do kind of a little recap of the news, and maybe that's where I started with the stock market because it's doing so well. But Jon Stewart from The Daily Show is back, and if you've not seen any of the segments, they're fantastic. And of course, there's other people on other days. I don't know if it's only just one person. That's all I've seen so far. But Jon Stewart's on Monday night. So make sure you check that out. Really good stuff. And you can check my wall. And you can also check the Facebook page for The Phil Ferguson Show. If you've not signed up over there, please go do so. Like that page and follow. And I'll try to add more content there than I've been doing in the past. And I must be ADHD or something because more shit keeps popping in my mind. I've had people ask me to make YouTube videos for the purpose of being on YouTube and TikTok and other things, whatever they are. Probably not going to happen, in part because I'm so freaking busy that I don't know. When would I find time to do it and learn about it? I don't know when that would happen. It would be nice if I had time to make some cute TikTok videos. Like I told my kids a few months back, you should become influencers. And they just sighed and looked at me and they're like, Dad, that's just not how it happens. You know, you got to put a lot of work and sometimes it takes years. So, okay. Anywho, back to Jon Stewart's on the news. Let's see what I'm just scrolling through some current events. Tucker Carlson went to Russia and sucked Putin's dick for a nice interview and showed us how wonderful they have shopping carts that you can put money in and have to return them back. Yes, Tucker Carlson, absolutely fantastic work. Trump, of course, is endlessly in the news because he keeps losing. All he does is lose. He lost a $350 million lawsuit from New York, I think it was. And the funny thing is, what was not reported, I found out that there's interest on top of that from when the case started or when the crimes occurred. I'm not sure exactly how that worked, but that's another $100 million. And so with his Eugene Carroll cases and some other things, him and his family members owe now something like $600 million. And of course, to offset that, they started selling, or at least they put out that they're selling gold. I think Trump called them gold-plated shoes. They're not gold-plated. They just have a golden fabric with a T for Trump and a flag, and for $400. And of course, whatever quantity they were going to produce, they sold out in one day. So I don't understand why they don't just say they're going to make more and take all the money. And one of the spots I saw had a disclaimer that the shoes Trump had were just representations of what the shoes will look like, and they may vary significantly in their appearance. And so I saw in my head, like gold-colored Crocs being delivered to everybody for $400. I think that would be an absolutely beautiful, beautiful thing to do. I'm just, for me personally, I'm starting to watch The Blacklist. And I'm doing that in Spanish to practice my Spanish because that's my new time filler if and when I have time. Or like if I'm driving somewhere, if I go out for my my daily walk to get some physical activity in, I'll be doing that. Let's see what else we got here. Oh, there's the settlement. Oh, if you didn't hear, the pillow guy, My Pillow, Mike Lindell, apparently during the mass hysteria of fake electors and election bullshit and everything, Mike Lindell went on a couple of shows and told people he would give $5 million to anyone that could prove that his data does not say what he claims his data said. Well, someone took the data and ran some algorithms and statistical analysis and was able to prove that Mike Lindell was wrong. And then he went to collect the $5 million. And Mike Lindell said, no, there's no way I'm paying that. And the guy took Mike Lindell to court. And the court has ruled, so be careful out there, that if you make a public statement where you clearly articulate the conditions and promise to give away money if someone meets those conditions, that you are likely going to be obligated to pay it. So Mike Lindell is going to be out another $5 million for his stupidity. So we have that amazing fun. Let's see what else we got here. I know there was more. Oh, Alabama. Yes, that's right. Alabama, right in the middle of the Bible Belt. Their Supreme Court ruled that a fertilized egg is a human, has all the rights of a human, at least a child. Not they can't drink or smoke or vote. They definitely can't vote unless they're going to vote Republican. But a fertilized egg is a human, and this resulted from a court case where someone wandering around in a in vitro fertilization laboratory opened up a container, picked up test tubes or containment vessels that had fertilized embryos in it and had no idea what they were doing, and picked up these vials that were at sub-freezing temperatures and immediately noticed that their hands were extremely cold, and then dropped them, and the eggs landed on the floor. The fertilized eggs landed on the floor. And so it went up to the Alabama Supreme Court, and the Alabama Supreme Court said those people could be liable. I'm not sure what they're liable for in the story, where it's manslaughter or something like that, involuntarily, accidentally killing somebody or somebodies. So the court ruled that the fertilized eggs are indeed humans. So the memes are going around, and one of my favorites was a couple of fried eggs in a pan, and it said chicken in Alabama, and another one had a carton of eggs in the passenger seat and said, now I can drive in the carpool lane. So obviously taking it to its irrational conclusion, but things are going crazy. Also, Russia is still slaughtering people in Ukraine, and we should do everything to help. One of the common Republican conservative memes that I see going around is spend money in America first, and lists all the things that we could do, like helping veterans and feeding the poor and blah, blah, blah. And my thought is, well, first of all, we can do both, or all those things, and fund Ukraine if we just had a reasonable amount of tax applied to the millionaires and billionaires that are in this country. And I had to point out to the person that the House of Representatives is controlled by the Republican Party, and they've done nothing at all to all the items that you claim you want to be done. Matter of fact, almost every one of those things are things that would be done by the Democratic Party. So let's see, another court case lost by Trump's former attorneys, who are being disbarred and sued one after another. It's not a good job to work with Donald Trump. You have to be a sycophant, which is what worries me, because if he gets elected again. John Oliver put up out of his own personal assets a promise to pay Clarence Thomas $1 million a year forever, as long as both John Oliver and Thomas are alive. $1 million a year to do nothing as long as he resigns from the Supreme Court. I thought that was absolutely fantastic. And if you didn't know it, the Republicans, or at least some Republicans, well, apparently every single member of the House, thinks that President Biden should be impeached for taking a bribe from a company, Burisma, I believe it's called, in Ukraine. And there was the famous informant that was telling the FBI that this happened. When that information was shared from the FBI to Congress, the FBI clearly told everybody that this had not been corroborated. Well, now it turns out that the FBI informant has been arrested, released, arrested again. I don't know why he's arrested the second time, but he was arrested for lying to the FBI, maybe some other crimes. And then it comes out that he was having meetings with representatives of the Russian government, Russian agents, and they were giving him lines and information to share. So once again, we have a clear indication that Russia wants to fuck with our election, and they want Trump to be in charge because Trump loves Putin, right? I mean, it's just absolutely amazing. Anyway, that's my first 2 minutes. Oh, no, 15, 16 minutes. But coming up in the show, we're going to talk about why you should consider or have a tax professional. And we're going to talk to someone that knows a lot about the IRS from the inside. We are going to call her Sarah. And Sarah is going to reveal some of the things that the IRS looks for, lists of things that are most likely to flag your tax filing for an audit, and some scams and cons that people do to try to help you, wink, wink, nudge, nudge, make money on your taxes for a fee, and then they disappear when you get audited and found out that what you did was either wrong or potentially illegal, and you're left holding the bag fighting the IRS, and they took off with the cut that you paid them. So the refrain is basically, if it sounds too good to be true, it is. And if anyone contacts you that says, hey, I can help you save money on your taxes by doing this, that, or the other, don't fall for it. Even if they make a lot of sense, don't fall for it. You should have a trusted tax professional, and maybe, just maybe, like I did, if it sounds too good, get another opinion, which is why I'm back to paying California income tax, even though I live in Florida, because California law says that the portion of revenue from my business that comes from residents in California means that I have to pay California income tax. And I have talked to professionals, including a tax attorney who's licensed and he's passed the bar in the state of California, who gave me actual cases that have been settled, legal precedent. And of course, a friend of mine said, well, you could sue them. No. For the amount of tax that I'm paying to cough up an attorney and fight the state of California for years, which could cost $50,000 or $100,000 without even trying, no fucking way. I'm just going to roll over and pay it. It's kind of like the cost of doing business. But we're going to take a quick break and go into some more content of the show. So please don't go anywhere.
The history of discovery, particularly cosmic discovery, but discovery in general, scientific discovery, is one where at any given moment there's a frontier. And there tends to be an urge for people, especially religious people, to assert that across that boundary into the unknown lies the handiwork of God. This shows up a lot. Newton even said it. He had his laws of gravity and motion, and he was explaining the moon and the planet. He was there. He doesn't mention God for any of that. And then he gets to the limits of what his equations can calculate. So can't quite figure this out. Maybe God steps in and makes it right every now and then. That's where he invoked God. And Ptolemy He bet on the wrong horse, but he was a brilliant guy. He formulated the geocentric universe with Earth in the middle. This is where we got epicycles and the machinations of the heavens. There was still a mystery to him. He looked up and uttered the following words: when I trace at my pleasure the windings to and fro of the heavenly bodies. These are the planets going through retrograde and back. The mysteries of the earth. When I trace at my pleasure the windings to and fro of the heavenly bodies, I no longer touch earth with my feet. I stand in the presence of Zeus himself and take my fill of ambrosia. What he did was he didn't invoke Zeus to account for the rock that he's standing on or the air he's breathing. It was this point of mystery, and in gets invoked God. This, over time, has been described by philosophers as the God of the gaps. Mm-hmm. If that's where you're going to put your God in this world, then God is an ever-receding pocket of scientific ignorance. If that's how you're going to invoke God, if God is the mystery of the universe, these mysteries, we're tackling these mysteries one by one. If you're going to stay religious at the end of the conversation, God has to be more to you than just where science has yet to tread. So to the person who says maybe dark matter is God, if the only reason why you're saying it's because it's a mystery, then get ready to have that undone.
The Phil Ferguson Show is for educational and entertainment purposes only. Nothing said on the show should be interpreted as personalized investment advice. Investments should be based on your personal situation, and you, of course, should consult with your financial advisor or tax professional before taking any actions. Welcome back, everybody, and as promised, I have on the show today, we're going to call her Sarah, and Sarah knows some things about taxes, and I'm not sure how much she wants to reveal about how she is an expert, but you'll just have to take it from me. If you trust me at all, that this is a person that knows about taxes. Sarah, are you with me?
Yes, I am, Phil. Thank you very much.
Excellent. What would you like to share about you that you think you can? Nothing? We just go into the questions?
So I have definitely known a little bit about taxes for probably almost 2 years now, let's just say.
Okay.
I enjoy what I do, and I think that I have a little bit to share with people and just get them up to speed about this interesting world of taxes for sure. There's a lot of misinformation and misconceptions out there, and I think some information, some good information is well past due.
Awesome. So one of the questions that I have, and I worry about this a little bit, what can trigger a tax audit? What's most likely? What can I do to reduce the chances? Do you have any thoughts on that?
So there are probably a number of things that would definitely trigger a tax audit, and that is just numbers that are out of proportion as compared to the norm in a population. That is just a statistical, deviational fact. And there are probably a lot of things that the IRS does on the inside that, do that. I wouldn't put it past them at all. There's probably a lot of, formulas they use to determine that. So, they have, calculators that you can use to estimate your taxes to get those numbers correct. Withholding estimator, you can get that on their website. But if you decide to claim something that is not yours, that would probably trigger an audit. Usually I say if it's too good to be true, it probably is. There are things that people will tell you that you can claim that you cannot. Tax schemes, as we put them, right? That's what they say, right? Tax schemes in the tax world. They have people out there that promote these. If you get caught, you will get an audit for this. And, there's the IRS puts out the 30 dozen about every year. Earned income credit, employee retention credit is a really good one this year. If you remember correctly,
from COVID?
From COVID, exactly.
Yeah.
So with that, people who wanted to promote tax schemes decided to call up people who were self-employed and tell them that they rated an employee retention credit.
What
employees are you retaining, sir?
I get those calls and emails almost every day. And I ignore it because I don't have any employees. So the very thought seemed so odd to me that I'm like, they obviously don't know who they're talking to, but maybe they do. And then the other thing, of course, is in my head, if there's a financial planner that's not making enough money to pay their staff, well, should they even be trusted with investments in the first place? I don't I don't know, because if they're radically overstaffed, I mean, maybe if someone was staffed for growth and we're making nothing, and then downtimes hit, they got caught. But it's kind of a money. It's like no one would ever bankrupt a casino. I mean, there's just certain things that. Pardon me, I got a little cough. But okay, so that's cool. Now, one of the things I recommend to people all the time is that even if they can do their taxes on their own, should they have a tax expert, an enrolled agent, a CPA, somebody like that? Do you think that's a wise expenditure of people's money?
If the taxes are over their head, definitely. But always caveat emptor, buyer beware. Because promoters can be return preparers. Those are the people that will show you how you can get more back by scamming the system. So always caveat emptor when you go to find somebody to do your taxes for you. Obviously, if you mess up, that is on you. But if somebody tells you that you can get more back if you do that, and it sounds too good to be true, then it probably is too good to be true. I would recommend that you, if the taxes are, your deductions are more than you can handle, or you're working more than one job, or you're working jobs in and out of state, probably have somebody else do your taxes for you.
And as a personal example for myself, I had 3 different professional tax people, all CPAs, give me 3 different answers on the amount of tax I should pay to California. I don't know if you and I talked about that in the past.
Yes, I remember that conversation.
Yeah, yep. So I finally had to find a tax attorney in the state of California, and it turned out CPA number 1 was correct, and number 2 and 3 weren't correct. So Phil is going to pay California income taxes again. But I just this last week finished, it's finished, my 22 taxes. So,
oh my goodness.
Yeah, just in time to upload everything to my 3rd accountant to do everything for 23. You had mentioned tax schemes. Do you have any ideas in mind? A couple of examples. You mentioned one about the job retention thing. What else you got?
Employee retention credit, earned income credit. This is where people sell Social Security numbers to people so that they can claim dependents on their taxes to get more money back. If somebody's selling you a Social Security number, that's not a good thing.
Wow.
So, don't do that.
People think that that's okay to do?
Yeah, people think that's okay to do, so they can get, once again, more money back on their taxes.
These
are all
by a standard deduction, right? I mean, what's the standard deduction for a dependent? $5,000?
It changes a lot. I think recently it went down from $3,500 to $3,000 or something like that. It changed this past year.
It's in the ballpark. So, now, is that a income reduction? Or that's a tax deduction?
that is it's a tax reduction, and it's earned income credit for a child dependent and other dependents that you can claim on your taxes.
So I guess to the listener, if you ever even thought it was a good idea, if someone contacts you and says, "Hey, I can sell you a social security number to put on your taxes," that you shouldn't do that. Do I need to tell people that? Is that apparently I needed to tell
Obviously,
somebody?
Yes. Because it happens. Yeah, earned income credit is a tax scheme that, like I said, these are dirty dozens that the IRS can put out almost every year. Every year they call it the dirty dozen, and some of them change. And once again, there are the common ones that you'll see almost every year. And obviously, there are more than the dirty dozen. Any given year, there's probably over 100 tax schemes out there. So,
what else is in the dozen?
Yeah, like recently this year, there was probably the PPP loans. Those are the ones of the people that took advantage of the loans for the COVID.
Yeah.
What is going on with that? I probably do not even know. But obviously, you should not apply for a loan if you did not rate the loan. So
wow.
Interesting enough about the employee retention credit, I do want to add is that the IRS put out a notification that if you did not rate that, you get the money back. There'll be no penalties or fines. Just give it back.
So kind of like a voluntary amnesty at this point?
Yep. Yeah, exactly. All y'all in free. So, but it's just the IRS doesn't really like going out there and wasting their time and people's time to collect money that they know that people owe. They don't like, their collection enforcement. They don't make tax law. Congress does. People, for some reason, think that the IRS makes tax law. They do not. The IRS makes tax law. The IRS doesn't make the fines and the penalties that are due when people break the tax law. Again, Congress makes those. They're the ones that bind the IRS's hands when it comes to enforcing and tax penalties, jail time, amounts that are due when people do not pay their taxes. Congress makes all these penalties, fines, jail time, laws, everything.
And
IRS has no power over that.
I've also noticed something relatively new to me, and I don't know if it's happened to a lot of people because my taxes can be kind of complicated, but sometimes, and this is more recently than historically, I'll submit my taxes and a state or federal agency will come back and go, yeah, we redid your taxes for you. Because we have some numbers that you didn't include. And sometimes I owe more than I filed for. And sometimes I owe less than what I filed for because there was some deduction that they said, no, you qualify for this. So we're going to give it to you. And here's your check. So I'm guessing the IRS has some information on people.
The IRS, has a lot of information on people. It was actually pretty surprising. And it is to accelerate the process a lot of times, not just for the person, but for the IRS as well. When you submit something, it goes into their system, and it can be either it's rejected immediately and sent right back to you, or it gets riddled with errors. And dependent on all that is how it goes through the process. It has a lot of mathematical jargon and stats and numbers and such, but the automated process is getting better. And all the IRS wants to do is to close the gap between what is owed and what they get.
Yeah.
That is it. That is the only job. Enforcement and collection. That is the only two things the IRS does. Enforcement and collection.
If I understand,
all they want to do is to close that gap.
There was some recent law passed. I hear conservatives crying about it, where there's more money for the IRS, more agents for the IRS? Do you have any knowledge on that?
The IRA, the IRA, the Inflation Reduction Act, gave the IRS a couple $1 billion to spread out over the next 10 years to hire, a couple tens of thousand agents and data scientists and all sorts of, people. Mind you, also the number of people that are retiring as well is over that number of years as well. So it kind of balances out to like a plus 30,000, I think.
Yeah.
But the issue becomes is that you can get so many people to need to be audited or looked at or investigated. You can put all those people up, but there aren't enough revenue agents to look at them. That becomes the issue.
Right.
And with the IRS, they've been underfunded for so long, decades. And what people seem to get the bad taste in their mouth for them is that when you don't have enough money to go after millionaires and billionaires who can put the IRS in lawsuits for 4 years with appeals, the IRS has to pay lawyers, pay court costs. They have to go through this entire process for 4 years while businesses and millionaires and billionaires put them through 4 years, 5 years of appeals and this, that, and the other. And they can get hung up in courts. We recently had, they recently had one go through the Supreme Court with offshore taxes.
Yeah.
So these things can go into the courts for a long time and all the way up to the Supreme Court even. And that costs money. And if you don't have the money to do that kind of stuff, what are you going to do? You go after your bread and butter, which are taxpayers that you can get while you're on the clock. Revenue agents go out to a taxpayer who owes, money on their taxes, and they audit them. The taxpayer pays that money. It's a day's work. 4 years of court costs.
Yeah.
But now that, yeah.
And now the scales have tipped a little bit where millionaires and billionaires, which is why probably Republicans don't like this idea, because that's their buddies, the really, really rich people.
Yeah. You always got to wonder, if you want something to fail, why?
Yeah.
Why would you want something to fail? Why would you not want to fund something? Why would you not want to give something money? And also, why would you want to abolish something that you make the laws for? You're the one making the laws for. They're just collecting and enforcing the things that you make the laws for, but you want to abolish that part? I never understood that part of the argument. You've abolished the ones that collect and enforce, but you still exist, the lawmaker. So that math doesn't math for me ever.
Yeah, it's just like I think every elected official, higher than a county board maybe or a dog catcher, should not be able to buy individual stocks. They should be all in index funds. The idea that they can buy stocks that might be affected positively or negatively by rules that they're looking at, even though they don't technically have inside information into a company, they have inside information into the regulations, and that's not cool.
Nope.
So more agents, you think they're going to be able to have the funds to go after more wealthy cheaters?
Oh, definitely. Yeah. And the fact that the IRS does not currently, according to the current administration, every time it changes with information, the rules change every time, but the current administration says do not go after taxpayers making under $400,000 a year. And the IRS does not. Any project the IRS currently takes on does not encompass anybody making under $400,000 a year. There is that absolute 100% cutoff. So it's any project that the IRS currently takes on, it goes after anybody making over $400,000 a year.
Yeah, I don't know if we should announce that. I mean,
yeah, no, it's not. It's absolutely 100%. That was the administration put that in effect. It was announced, and it absolutely is 100% taken seriously.
Now, one of the things I want to go over real quick, I mean, or slowly, depending on what it needs, but how will the IRS contact me? Will they contact me and say, I owe $5,000 in taxes, and if I don't pay it there on the phone with my Visa card, they're going to send the cops to my door?
So they'll usually issue a soft letter, and they just say, hey, you owe this money, pay it, period. That's seriously a soft letter. They pay this money, or you need to do this, or you're missing this, or whatever. Revenue agent may come out, somebody might contact you, but in all seriousness, the IRS just wants you to pay the money. They don't want to go to court. They don't want to put you in jail. They don't want to do, unless obviously you've done something really wrong.
Yeah.
The IRS does not want the rat's nests that involve the courts and the fines and anything. They just want the money. Interestingly enough, most everything is on the civil side. There is the two sides to the IRS. There's the IRS, and then there's the IRS criminal investigation. There is two sides to the IRS. And the IRS criminal investigation, they are the only ones, criminal investigation revenue agents. They are the only ones that are allowed to carry weapons. So if you ever see somebody with a weapon that has anything with IRS on them, you need to run in the opposite direction, because that person done messed up. So they're the only ones. This is IRS criminal investigation special agents, as I was. So not even the revenue agents, it's the special agents. So those are the ones that go out there and they're handling somebody that really, really messed up. So I don't know where anybody gets these ideas that revenue agents are armed. Revenue agents can't even carry their own personal weapon in a car when they go out for an audit. So there's nothing on that revenue agent when they're out there. They are not allowed.
I just thought of a new show for TV, and it's going to be IRS Orlando, and it's gonna be like NCIS or these shows, but also have a hint of Dragnet to it. Where they're going and catching the tax cheats, and it's funded by the government to show examples to people of what can happen to them, so more people pay taxes. What do you think?
Yeah, I'm gonna be laughing about the ones that are more like the people off the grid. Yeah, and they're shooting at the IRS agents coming up to their door.
Oh my goodness!
Hillbilly Hank, you ain't coming for me. They had that standoff in California at that farm that one year, because of the IRS guy came up to issue something, and oh man, that's where that one started. Oh man, the federal agents. Oh.
Excellent. Are there any other things about the IRS you feel like you could address without getting in trouble that we haven't covered yet?
I could talk about more schemes if you wanted to, but I don't know if I touched on anything that anything else that you would want to talk about there.
No, I'm good. I just want to talk long enough to get a nice interview, and we did that, and I want to be respectful for your time. So if you don't want to add anything else, that's cool, and I'll thank you, of course, for being on The Phil Ferguson Show.
My father, the man responsible for my education, taught me that Islam, rightly understood, is a religion and philosophy of peace. In fact, he said that for any society to be peaceful and prosperous, it had to institute the rule of God, or Sharia. I came to disagree with my father. It was a gradual process that started when I entered and lived in societies such as the Netherlands and the United States that applied man-made constitutions and laws. Both countries are peaceful and prosperous. I now disagree even more with my father that Islam is a religion of peace. When I look at the amount of security that is deployed tonight here. The amount of security that is deployed for the Richmond Marathon. 6 months ago, the Boston Marathon was bombed by two brothers who invoked the founding documents and the founding father of Islam. I disagree with my father when I look at the wanton killing of the Westgate Mall in Nairobi by Somali men invoking Allah and Muhammad to justify their horrid act. Kenya is the most hospitable country to Somalis fleeing their own country, so it distresses me even more. I disagree with my father when I look at the reports this week of 30 men and women worshipping in Iraq who are killed by a suicide bomber invoking the very same God and the very same prophet that they invoke. I disagree with my father when he says that Islam is a religion of peace. When I look at the 120,000 dead in Syria, Syria is now a stage of a proxy war between Islam's two most important and most influential nations, the Sunni Kingdom of Saudi Arabia and the Shia Islamic Republic of Iran. I disagree with my father that Islam is a religion of peace when I read about the almost daily reports of the destruction of churches, the pillaging of Christian property, the rape of Christian women, the terrible exodus of Christians and other religious minorities from Muslim countries. All this is done by men who invoke the founding father and founding documents of Islam. I disagree with my dear beloved father when I read about the teenage girl in Pakistan who's shot point blank in the head by a man invoking Allah and Muhammad because she wanted education. In the name of Allah and Muhammad, women are forbidden to drive. They're forbidden to own their own reproductive rights. They're forbidden to do anything unless they have permission from a male guardian. I disagree with my father that Islam is a religion of peace when I read these founding documents and I study the history and the example of the Prophet Muhammad. In there, I find an insistence of war and intolerance towards infidels, the hypocrites, those who associate God with others, homosexuals, women, and so on.
You're listening to The Phil Ferguson Show.
The Phil Ferguson Show is for educational and entertainment purposes only. Nothing said on the show should be interpreted as personalized investment advice. Investments should be based on your personal situation, and you, of course, should consult with your financial advisor or tax professional before taking any actions. I want to make a quick little segment on taxes, CPAs, tax accounts. This stuff is complicated. And I know some of the things, but I don't know all of the things. And if you only have a couple $1,000s, maybe this doesn't help you. But for most people, I emphatically suggest that you have a tax professional that you use. I get that you can get probably free software, and for a lot of people, that's perfectly adequate. But if you have multiple accounts, multiple things going on, you own some property, you have an IRA and a 401k, all the time things come up that people just don't know about taxes, and it can be worth a lot of money if you make a mistake. The next thing is once you have a tax professional, and of course, this is now December, right? Near the end of a year, you want to meet with the tax professional, of course, to do your taxes. But if all you do is hand them everything and then they key it in instead of you keying it in, I understand how you could think, why would I pay $300 or $400 or $500 or $800 or whatever it costs for them to do that? I could do that same shit myself. Yes, Yes, you could. You're doing it wrong. What you want to do, and maybe this year is not the time to do it, but after you've done your taxes, at another point in the year, May, July, September, November, maybe December, sit down with your tax professional, even if it is an additional fee, and make sure they fully understand what's going on in your world. And make sure you ask questions and run scenarios by them. Recently, I was talking to someone on Facebook and helping them out with some questions that they had. One of the problems you might face if you send an email to a tax professional, they will feel obligated to make sure that they very carefully articulate a response to the question that you asked. And they can give you a lot of detail and a lot of parameters and a lot of, well, in this situation and that situation, and it can get very complicated. And they have given you a truthfully correct, detailed answer, but you asked the wrong question. So the answer you get is perfectly fine, but completely useless to you. So this is one of the reasons why I recommend people to meet their tax professional in person, especially if you don't know the language. So it can be very easy for you to say, I have a question about long-term capital gains, and you ask the question, and the person will try their best to understand what your question is, and they'll answer based on the very specific words that you chose, but you may have asked the wrong question. So in person, you can say, oh, no, I that's not what I was talking about. And you can redirect. Or the tax professional can see your face and say, in their head, wow, they're not understanding what I'm saying, and they can try a new approach. So something to keep in mind. So I had one example on Facebook, where someone was going to sell a house and didn't know how capital gains worked on them selling a house and how it affected their income and their taxes. Who knows that? Who would know that? I don't expect you to know that, but I would expect that you have a tax professional that you can talk to and go over the possibilities. Do you sell it this year or next year? Are you going to keep the capital gains that you're making from this house, and therefore you can turn off getting money from a retirement account during that year to reduce your taxes? Can you spread it over 2 years? Can you take the profits that you made and roll it into another property, another house, some farmland? Do you get a standard deductible? How much are you going to pay? What is your rate? All of these things I would expect that you don't know. And that's cool. Just embrace the fact that you don't know it and find someone who does. The savings to you could literally be tens of thousands of dollars by doing something slightly different than the way you were going to. Another example, one of my wonderful clients, and I'm going to make up new and different information so you can't possibly know who they are, but if they listen, they'll figure out it's them, but nobody else will know. So let's say I have a customer that has a client that has $1 million, and they've got $500,000 in a taxable account and $500,000 in a Roth IRA. They are still working, so they're not in retirement, and they have an opportunity to buy a piece of property. And they contacted me and they said, Phil, I'm going to want you to sell $100,000 of stuff from my IRA, and I'm going to take that money out of my IRA, and I'm going to buy this piece of property that maybe they want to build a house on, maybe they want to develop it, maybe they think it's a great price, and a few years later they can sell it for more. It doesn't matter why, but they need this possibly $100,000. And they thought taking it out of the IRA would be the easiest thing to do. So because they are still working and because they are under 59 and a half, there is the possibility that if you take $100,000 out of your IRA in these conditions, that you would face not only a 10% penalty for taking that out before 59 and a half, which I'm not going to get into. There are exceptions to that. A couple of different ways you can avoid that if the situation is exactly right for you. So you don't absolutely have to wait to 59 and a half, but for most people, 59 and a half is the cutoff. And then any money you take out of an IRA counts as income in the year in which you took the money out. It's not earned income, that's a separate subcategory or type of income, but it is income, and it gets stacked on top of your income that you're making for that year, that calendar year from your job. And you will pay, and the phrase that I'll say is, you will pay the marginal tax rates on that additional income. And this is where people, again, don't know taxes, and why would you? But you should know, especially if you're making good money and have investments, what is your marginal tax rate? So if you're very low income, you might pay 0 or 10% or 12% or 18% or 24%. And the more you make, the higher the tiers that you pay taxes, the higher the tax tier. These our tiers are separate, and it does not go back to $1. So the first chunk of money you make, even if you make $300,000 a year, there's a little bit, $10,000 or $12,000 that you pay 0% on. Cool. And then there's a chunk that you pay 12% on. And then there's a chunk that you pay 22 or 24. Often people think that once you get into the tier where you pay 32%, that you now pay 32% on everything you made that year. You do not. You pay only on the amounts over the cutoff for that tier. So that's a marginal bracket. You can also calculate, or your tax professional can calculate, what your average federal tax rate is, and that'll be lower than your marginal rate. But when you add money from your IRA, especially while you're working and have good income, you might stack that $100,000 in this case on top of the money you're already making, on top of your earned income. And that money out of your IRA, you might pay 24, 30, 32% federal tax on it. This is in addition to the 10% penalty. And depending on the state that you're in, you may also pay additional state income tax. So if you pay 30 federal, 5 for your state, and a 10% penalty, theoretically, you could pay 45% tax on the $100,000 that you just took out, which of course would be $45,000 out of your pocket. That's a pretty serious and brutal hit. If you happen to have a taxable account, in this case, this person did, and we want to take out $100,000, now you only have to pay tax on the gains. They can be short-term gains or long-term gains. The long-term gains for people with lower total income and capital gains together, the tier for that is 0%. Most listeners are going to pay 15%. If you're doing really well and making a lot of money and or have a large long-term capital gain in a specific calendar year, you could pay 20% or even more. And you should be so lucky to have that kind of income. Great for you. Let's assume you're going to pay 15% on the gains. So if you take $100,000 out of that account, let's say that you have put in $60,000 originally, it grew to $100,000, you have $40,000 in gains. So when you take out that $100,000, you have $40,000 in long-term gains. If your tax rate on that $40,000 is 15%, that's a $6,000 tax. So you take $100,000 out and you pay a $6,000 in tax, not $45,000 from the earlier part of our example. These are little things where I literally, in this specific case, the difference is $39,000. Now, you'll probably have to pay tax on that retirement money later, but you would have pay at a lower tier and you would avoid the penalty later on. But $39,000 is the difference in taxes. Now, if in addition, in your taxable account, if you have multiple investments, and this gets down to a fundamental idea that I like to promote, two fundamental ideas that are kind of related, is clarity and granularity. If you own only one mutual fund, well, whatever you own, and whatever gains it has, that's what you have to sell. You sell $100,000, you have $40,000 in gains. End of story, end of discussion. Fine, whatever. However, if you have some bond investments, if you have domestic and international stock index funds, if you have different domestic and different international stock index funds, depending on the recent activity in the market, you will probably have some items in your portfolio that have done better and some that haven't done as well. Now you can go in with a scalpel and you can pick and choose which things you want to sell, assuming your goal is to reduce your current tax liability for the $100,000 that you want to take out. So in this case, with this client, we were able to identify $100,000 worth of stuff that we could sell and create a total of just $20,000 in long-term gains. And because 2023 is not over, we took out all the stuff that had a net no tax gain, and then half of what was beyond that for a long-term gain of $10,000. And then in January, we'll sell the remaining items that have another $10,000 in long-term gains. And so now the taxes on the first $10,000 is $1,500 in calendar year 23, and then $1,500 more in tax year 24, clearly for a total of $3,000 of tax responsibility, which is half of the $6,000 if you just had to pull out of one fund and you had $40,000 in gains on your $100,000 that you took out. So here was a way to dramatically reduce the taxes from possibly $45,000 to possibly $6,000 down to $3,000, which we split over 2 calendar years. So $1,300 in taxes are due in 23 and $1,500 will be due for in 24. And so that is a way to dramatically reduce your current tax liability, assuming that is your goal, and spread it out between 2 years, in this case, 23 and 24. Now, maybe, just maybe, you went a step further and you said, well, that's great, Phil, but by picking and choosing and not selling across the board, their portfolio is now out of balance. And you would be exactly right. But remember at the very beginning, this person was fortunate enough to have $500,000 in a taxable account and $500,000 in an IRA. So now what can be done if one chooses to do so, and I will be doing it for this client in this case, is I will go and reduce some things that are now overweighted in the IRA, sell those and buy things to replace what was in the taxable account. So now between the taxable and the IRA account, collectively, the entire portfolio is now correctly weighted in the different types of investments: stocks versus bonds, international versus domestic, large cap versus small cap, growth versus value. And hopefully that can be done with a handful of trades. And if those trades are done inside of the IRA, there might be transaction costs to make those trades, but there's no tax liability currently created in either 23 or 24. It's still all deferred taxes. If you have a Roth account, of course, you can make those transactions and you'll never have a tax bill due on the money you take out of the Roth. Again, based on current law, which is subject to change, but currently, no matter how much you make in your Roth account, you don't have to pay taxes in the future. So knowing all these things, or sitting down with someone who does know these things, having a financial planner, having a tax professional, could literally make you tens of thousands of dollars. So that's one of the reasons why you might want to have a financial advisor, assuming they're not just a salesperson selling you shit and they're actually trying to save you money, but a really good reason why you want to have a tax professional, because you can sit down with them and say, here's what I want to do. Given my condition, given my circumstance, given the types of accounts that I have, what is the way to do that and avoid current taxes? So I just wanted to share something that just one of the things that happens in an average day while I'm doing my job to help people try to avoid taxes for now and defer them into the future, where hopefully that in this case, the extra $39,000 or $42,000 that they're not paying in taxes continues to compound. So when they do pay taxes, it's on a much larger portfolio. So hopefully that helps. That was some information on why you should have a tax professional.
Pace e lunga vita.
Lunga vita e prosperità.
Once again, thank you for listening to the Phil Ferguson Show. I'm delighted that you're here. If you like the show, go leave a 5-star review at Apple Podcasts or Stitcher or any other place where you can leave 5-star reviews. I don't know of any others, but if you do, let me know. Of course, I'm always looking for ideas. I've got several emails that have come in that I'm contemplating answering their question and doing what they suggested. But again, it comes down often to when do I find the time to do it? But that's okay. It's good to be busy. It's good to be wanted. So all that going on. In case you were wondering, the pool is doing great. Thank you for asking. It is a lovely bathwater, almost hot tub temperature, 90 degrees. So someone said, well, when I go into a pool, I like it to be refreshing. Not when it's 60 degrees outside, you don't. You don't want a cool, refreshing pool when it's 60 or 70 even and windy, especially if you've gotten used to warmer weather like we have here in Florida. But I expect it won't be that hot in the summer because when it's 90 plus outside, I want to go into the pool to cool off. See, so it depends. So the new heat pump is working great. The new water pump I told you guys about is working great. So that's all taken care of, and I don't have to worry about that too much going forward. I forgot to mention, even in the beginning of the show, went on the cruise, the Free Thought Cruise, run by Central Florida Free Thought Community, which is a fucking amazing organization. The Williamsons, thank you very much. I know they do so much work to make this happen. And the beautiful thing is so many other people do as well. So to all the people that set up and host meetings all around Central Florida, thank you. Thank you for doing all of that work where I can just show up at a pub for a quiz, or I can just show up for a talk, or I can show up and help clean the side of a road. Thank you for doing all that work that I'm not doing. And so thank you for doing all of that. But anyway, the cruise. So I think I mentioned my first and only cruise experience prior to this was not the best. And it was also with Central Florida Free Thought Community. Not a fault on their part, but I don't know. I just didn't get into the cruise. So, but this cruise, absolute joy. Really like that. But the funny thing, here's the funny thing. On the last full day of the cruise, not the day we got off the boat, but the day before, I started to get a cough and a little tickle in my throat, and realized I had caught something, tried to stay away from people as best I could, but I'm on a fucking boat, right? So I get off the boat, we get off the boat, we get home, and I test negative for COVID. But the cold lingers for a good solid week, and I tested 3 different times, no COVID. So I just got a cold, a respiratory infection, whatever. There were times I was coughing so hard that I thought maybe I was going to throw up, and then I decided, you know what? It's not really coughing; it's ab exercises, because man, I was coughing so much that my abdomen started to hurt. The muscles started to hurt from overusage. But got over it. But as I was recovering, our house guest, who we adore, no problem there, they got COVID. So I got better for like a day or two, and then I got COVID. And so for me, last I tested yesterday, I was still positive, but I'll test again tonight or tomorrow. I'm pretty sure I'll be negative and I'm over it. And for me, it worked out pretty easy. Now, part of the reason it works out pretty easy is I've had 5 vaccinations over the last several years. And 2 years ago, I had COVID. So vaccinations don't prevent you absolutely from getting COVID, but hopefully your experience would be more like mine, where I had a little cough. It wasn't bad. My throat tickled a little. It was actually worse when I didn't have COVID the week before. The other infection was worse than the COVID. The thing that really convinced me I probably had it is all of a sudden I had chills, which was the single worst symptom I had 2 years ago. And, everybody reacts differently. And of all the problems one can have from COVID, I'm doing pretty well. I got pretty lucky. Last time it was really bad chills. This time it was mild chills. Went to bed. I could sleep almost the whole night. When I had the really bad cough, I was up every hour or so, and waking yourself coughing, you don't get much sleep. Right when you need it the most, you're trying to recover from an illness. But the COVID didn't keep me awake. I slept 10 hours one night, 12 hours another night. Just slept 8.5 hours last night. And so I'm on the road to recovery. But out of an abundance of caution, I will remain sequestered in my house for a couple more days. Not a real big challenge because that's kind of how I live most days, and have UPS and FedEx deliver stuff from Amazon as needed. But doing well. I'm on the recovery side of that. So hopefully another day or two and I'll be out in the world again. But that's it for now. So thank you so much for listening to the show. I do appreciate you being here. And of course, if you have show ideas or questions, you can email me, Phil@PolarisFinancialPlanning.com. And I'll talk to you later. Ciao.